In the last episode, we followed an order from the moment you hit that buy or sell button all the way to the exchange and back, and how the whole thing happens over milliseconds. Now, whether you are a trader or an investor, you may place your orders a few times a day and close your laptop and maybe check your P&L one last time and get on with your day. As far as you are concerned, your day is done. But here's the thing I got curious about. You see, for all of us as traders and investors, come 3:30 and the market shuts down and it's over. But I realize for a broker, 3:30 in the afternoon is just when the real work begins. Because that trade you placed, it isn't actually settled yet. The shares haven't moved, the money hasn't moved either. The charges haven't been calculated. Your contract note doesn't exist yet. And the number you'll see in your funds tomorrow morning, that too hasn't been worked out yet. All that happens after markets close, all through the evening and through the night while you're having your dinner or maybe fast asleep. There's an entire machinery running in the background post-markets, making sure that by the time you log in tomorrow, everything adds up to the last decimal. I really wanted to understand in detail as to what actually happens post-markets. So like last time, I sat down with our teams and had them walk me through the whole thing. Market close to market open. And it's a side of trading almost nobody bothers to see. So that's what this episode is all about. What happens after the market closes? Again, it's specific to how we build things at Zerodha, but every broker in India does some version of this. So this should be relevant to you no matter which broker you trade with. Personally, I found these set of processes far more complicated than the journey of an order. You will soon know why. I'm your host Sandeep Rao, and this is what happens after the market closes. You all know at 3:30 trading stops for equity and the F&O segment. The next thing that happens as soon as a segment's trading is closed, and depending on the broker, either the exchange files are collected from the exchange portal, and for some brokers, the internal systems generate the trade data. Now, an exchange portal is basically a secure online gateway that the exchange gives every registered broker access to. Think of it like a dedicated dashboard where the day's official records are made available for download. This is the exchange's version of the day's records, and it becomes the source of truth for everything the broker does next. Each segment, equity, F&O, currency and commodity, has its own complete set. So you can imagine the sheer volume we are talking about. Millions of individual records across all these files every single trading day. Once these files get downloaded and dropped into specific predefined paths on the broker system, sitting there waiting for them are the EOD, that is end of the day processes, programs that automatically pick up each file the moment it lands and start working on them. Also, these files don't all arrive at once. They kind of trickle in batches over several hours. And each segment gets processed independently the moment its files are ready. The systems don't wait for everything to arrive before starting. So as you would expect, equity and F&O files usually land somewhere between 4:30 and 6 in the evening. Equity gets processed around 6, F&O once its files come in. Currency or CDS arrives around 6 as well and is handled separately after that. Then there's commodity, which is the odd one out because the commodity market closes around 11:30 at night and sometimes at midnight depending on daylight savings. So those files show up only by around 1 or 2 in the morning. And the commodity process runs at about 4 in the morning. So by now you get a sense of what happens at night. It's all staggered segment by segment, file by file, stretching from late afternoon all the way to early hours of the morning. So the files have landed and the processes have picked them up. Now what? This is where our in-house back office processing system takes over. And this system runs the whole show for the rest of the night. Now here's an interesting thing to remember. The whole trade processing runs segment-wise, which is equity trades are processed as one batch, F&O as its own batch, and so on. And that's because, remember, the files arrive segment by segment at different times through the night. So it makes sense to process each one as it lands. But everything after that trade processing runs together at the level of your individual account. Not segment by segment, but at account level. So what does the back office processing system actually do? First, it calculates all the costs for each trade, which includes the brokerage, STT, the securities transaction tax, stamp duty, SEBI turnover fees, and GST on top of some of those, and any other applicable charges depending on what you traded. Then comes the obligation. Now, the obligation is an important concept here. It's basically how much money needs to be collected from you or paid out to you based on everything you did that day. For instance, if you traded equities and took delivery, the obligation has two sides, money and shares. Well, if you buy something, you owe money for it, while the shares are due to come into your demat. Sell and it's a reverse. The shares go out and the money is due to you. But in the F&O segment, nothing physical moves. It's all cash. And here the obligation actually comes from the clearing corporation as a value. The broker's job is simply to match and verify it. What that value is depends on the trade. Buy an option, you pay the premium. Sell an option, you receive premium. Trade futures, and it's a mark-to-market adjustment against the day's close. And once all of this is done, the back office processing system generates two things we all recognize: the contract note and the margin statement. And because all the segments were pulled together into one account view, you get one clean contract note. Every trade, every charge, exactly how your money was settled. So by this point, the broker systems know precisely what happened, what it cost, and who owes whom. But you see, knowing the numbers is one thing. Actually moving the shares and the money to match those numbers, that's a whole separate process by itself. And that's where things get really interesting and complex. So the broker knows your obligation. They also know if you are owed shares or you owe shares. And an obligation is just a number sitting somewhere in the back office system. So at some point, the actual shares have to move out of someone's demat account somewhere and into your demat account. That's settlement. And this part happens between the broker, the exchange, and the depository over one day. The settlement period, that is, T+1 as it's known. Let's start with buying. Say you bought shares yesterday. The money for that purchase was already blocked when you placed that order. And now, as a part of the settlement, the money leaves your account. And then the broker pays it across to the clearing corporation. So your side of the job is done. The shares are now owed to you. But how does the clearing corporation know to send us our shares? How does it know it's your account and the specific quantity? Well, the answer goes all the way back to the moment we opened our broking account and the demat account. When we opened an account, we get two numbers as identifiers. One is the UCC, our unique client code, which you can see here on Kite. And the other is our BOID, our demat account number, which we can see over here. The two are linked. Our UCC is mapped to our demat account through the BOID registered with NSDL or CDSL. And that link is the key to this whole process. The UCC identifies us on every trade, and the BOID is the demat account the clearing corporation delivers into. So when we place a trade, it carries our UCC, a tag that identifies every trade we make. So the exchange and the clearing corporation behind it already know exactly who bought what and at what price, right down to the individual client. So yes, once the funds are settled, the clearing corporation credits the shares directly into our demat account using the BOID mapped to our UCC. This is the payout of securities, and it happens by 3 p.m. on the settlement day. Once that's done, the shares are all ours, sitting in our demat in our names. Now the same logic works in reverse when you sell, except now you are the one who has to deliver. The moment you sold, that trade also carried your UCC, so the exchange already knows it was your account, your quantity, and your price. That becomes your obligation, except this time it's a delivery obligation. You promised shares, now you have to hand them over. Well, there's someone sitting in the middle of every single trade, the clearing corporation. Think of the clearing corporation as the great middleman of the market. Every seller delivers their shares to the clearing corporation, every buyer receives their shares from the clearing corporation. So when you sell, The broker fulfills your side by earmarking, essentially blocking those shares in your demat account and transferring them to the clearing corporation's pool. This is the pay-in of securities, and it has to be done by 10:30 on the morning of the settlement day, that's T+1. And on the other side of the same clearing corporation, a buyer is receiving exactly these shares as their payout a few hours later by 3 p.m. the same day. Your pay-in is in a way somebody else's payout. Now it's important to understand there are two specific roles there. One played by the exchange and the other played by the clearing corporation. The exchange is where the trade is matched and recorded. It's the "this trade happened" layer. The clearing corporation is where it's actually settled. It's the shares and money have now genuinely changed hands layer. One records a promise, the other makes sure the promise is kept. Now you might have noticed I keep saying yesterday, the settlement day and T1 as well. And that's because the settlement of shares doesn't happen in an instant. In India, today we are on what's called a T+1 cycle. Trade today, settle the next day. So the shares you buy today land in your demat account the next trading day. And that is why when you buy a stock, you sometimes can't move it or pledge it the very same day. The settlement machinery is still catching up in the background. So that's the shares taken care of, delivered, credited, all matched against the obligation the broker worked out earlier. But moving shares is only half the settlement story. There's a whole team making sure each one of these transactions actually reconciles. That what left one account genuinely arrived in the right one. And that's a job that runs deep into the night. Now, so far everything I've described sounds fairly automatic. Files land, systems process, shares move, and a lot of it is indeed automated. But sitting on top of all of it is a settlement team, humans, not bots, running a series of checks through the evening and deep into the night. Because in this business, the system move the shares isn't good enough. Someone has to verify what was supposed to happen actually happened, down to the last share, the last rupee and the last decimal. Let me walk you through the night roughly in order. As I said earlier, it starts at around 3:30 in the evening with something called payout reconciliation. Remember those shares the clearing corporation credits to buyers on T+1? The team verifies that every single one of those went to the right demat account, that the person who bought it is the person who received it. While it may sound obvious, but at the scale of lakhs of clients, this is a serious checking exercise. Then at around 6 p.m. comes in pay-in execution. This is the sell side we talked about. But there's an important detail here as well. On the trade day, that is day T, the shares aren't actually moved out. They are only earmarked, that is blocked in the seller's demat account. The actual debit, the shares genuinely moving to clearing corporation's pool, happens on T+1. And in between, the clearing corporation runs its own check at around 10 p.m. on the trade day. It verifies each broker's earmarked quantity against the actual obligation. Only the exact quantity that needs to be delivered stays blocked overnight, ready to move the next day. Then at around 9 p.m., another part of the process happens. Obligation reconciliation, that is. And this is really the heart of the night's work. The settlement team checks if the exchange's version of the obligations matches the broker's own internal back office records and also matches the depository balances. Data from three sources, the exchange, the broker's books, and the depository, all have to match. And if there's a small mismatch anywhere, it gets flagged and chased down until it's resolved. Then later in the night around 10:30, two important files get generated. The first is the holdings file. This is a complete client-by-client picture of what everyone actually holds. And not just a single number. It breaks down what's receivable, what's deliverable, what's pledged, what's blocked, everything. The second is the collateral file, a pledge margin file containing each client's collateral details. This is super important for us as traders, and it's what makes our margin available for trading the next day. If you pledged holdings to get extra margin, this is the file that carries that information forward. And through all of this, the team is also generating a stack of EOD, end of the day reports, settlement reports, margin reports, holdings, shortages, reconciliation summaries, all of that. These then go out to the operations, risk and compliance teams. Because it's not enough for the settlement to be correct, it has to be recorded as correct. So there are people whose job is to watch over exactly that. So while you and I are asleep, there's a team cross-checking 3 sets of records, generating the files that will decide what you and I can trade with tomorrow, and signing off that the day properly balances. And they do this the night of every single trading day. But we're not yet done. So far, here is what has happened. The settlement is done, the shares have moved and the final holdings are locked in. The broker now knows exactly who holds what in what quantity. Only now, with that settled picture in hand, can it move to the part that's actually for you, working out your individual numbers. Your cost, your profit, your loss, your tax. Now to do this, the broker pulls together quite a few inputs. First is the day's trade files. The fresh holdings file that just got generated, the one that says exactly who holds what, right down to whether it's a T1 or a T2 quantity, what's pledged and so on. The next is the previous day's holdings file so it can compare. Then the positions file and the bhav copy, which is simply the exchange's official closing price file for the day. Every stock has its own official closing price in the bhav copy. That's what everything gets matched against. With all this information, the broker now calculates 3 things. First, your buy average using something called FIFO, first in, first out. Say you bought a stock 3 separate times at 3 different prices and then sold some of it. Which shares did you actually sell? FIFO answers that. It assumes the first shares you bought are the first ones you sold. That's what determines your true cost price for whatever's left. It's calculated using a defined method, the same rule set the tax system expects. Second, your profit and loss, calculated on those same FIFO rules and also aligned with income tax rules. So the P&L you see is computed the way the tax system will actually look at it. And third, flowing directly from that is the tax reports. Realized gains, unrealized gains, and each of them split into short-term and long-term because that classification matters how you're taxed. The broker works all of this out for us. Now, just like everything else, these calculations don't run all at once. Each one waits for its segment's settlement to first finish. So F&O P&L runs around 9 p.m., currency around 9:30 p.m., equity around 1 in the morning, and commodity, the latecomer again, at around 3 a.m. And once each of these is done, the data gets synced to console, the back office platform for us, the traders and investors. This is the bit we get to see. When we log into console and see our P&L, our holdings, our tax reports laid out cleanly, this is the finish line of everything we've talked about so far. All those files, all that settlement, all that reconciliation, it ends up here as a few clean screens we can actually make sense of. While it seems we are done, but there are some processes that still need to be closed. Fund specific. You see, funds have their own rhythm through the night and it's a little different from what you would expect. Let's start with money coming in, that is funds paying. You add money to your account through maybe UPI, IMPS, RTGS, whatever you use, and on Kite you see it almost instantly. The moment the payment succeeds, your balance reflects it, and you can trade with it right away. That part feels real time because it is. But what you see on Kite and what's recorded in the back office are 2 different events. The back office, the official ledger, the permanent record, doesn't update instantly. It updates in batches through the day and night. And then there's reconciliation, making sure the money the broker thinks it received actually landed in the bank. This happens on a T+1 basis. So the payins that come in today are reconciled by 8:30 the next morning. And the reason for the delay is because banks typically send the broker the official statement only the next day. And obviously the broker can only match its own records against the bank's record once the statement arrives. Until the bank confirms, the broker can't fully close the loop. Now over to the money going out, that is payouts. And this is where it gets a bit interesting because withdrawals happen in 4 separate batches across the day and night depending on a set of rules. The first is the instant payout running through the market hours roughly 9 am to 4 pm. If you haven't traded that day and you're withdrawing up to 2 lakhs, it goes out instantly. Simple, fast and done. The second is the early payout around 6 pm. This is again for non-traded users but for any amount. So if you wanted to withdraw more than that 2 lakh limit, this evening batch handles it. The third is the post-settlement payout around 11 pm. And this one has to wait because it's only after equity, FNO and currency all have finished settling in that the broker has a clean final picture of how much money a user actually traded with and is genuinely free to withdraw. From a broker standpoint, you obviously can't pay out what you haven't finished settling. So users who have traded get their payouts here once the night's processes are mostly done. And the fourth, commodity, our latecomer yet again, because commodity only finishes settling around 4 in the morning. Payouts for commodity users happen after that around 6 am. 4 payout batches on a timeline. So notice the pattern. If you didn't trade, your money is easy to release. It's just sitting there and you can have it fast. But the moment you've traded, your payout has to wait for the settlement to finish because until then, the broker doesn't fully know what's yours. Your money is essentially queued behind the night's reconciliation processes. Now, if you think the night's work is done, well, nope. So the settlement's done, the money is sorted, your reports are ready. There's just one last thing before we can call the night's truly over. And that's getting everything ready for the next morning. You see, when you log in the morning before the market opens, you need to see the right numbers. The right opening balance, the right holdings, the right margin. And all of that has to show up on Kite before the market opens. So 3 things get uploaded to make that happen. First, fund balances, your free opening cash, your collateral margin. Second, the span margin file uploaded by the risk team. This is what Kite uses to work out your free cash after margin requirements. The breakdown you see on your Kite's funds page. And third, the holdings file, so that the system knows exactly what you hold and so you can sell only what you actually own. And depending on the broker, these go up automatically through APIs or an operations person uploads them by hand. Either way, once they are in, they are locked for the morning. And that's it. The loop is now closed. By the time you wake up and open Kite, last night's entire journey has quietly reset into a clean opening balance. I think there's one more thing pending, I promise. This one is for the regulator. Every day, the funds and the collateral you deposited get moved to the clearing corporation, NCL. That is the NSE Clearing Limited for equity and FNO segments. MCX-CCL for the commodity segment. And it gets allocated against your UCC segment by segment based on the margin you actually used. The clearing corporation then checks each client's allocation against the margin their positions consumed to see whether they are in surplus or if they are short. And here's the part that protects all of us. All of this, every client's collateral gets reported to the exchanges every single day. Monday's balances reported by Tuesday evening, and to keep it honest, the exchange itself sends you a weekly summary of what your broker has reported on your behalf so that you can independently check that your money is where it's supposed to be. Yes, that message from the exchange you probably ignored. That's this. Then there's also margin reporting. After each trading day, the broker has to report every client's available margin to the exchange within T+5 working days. And if your available margin was below what was required, that's flagged as a shortfall. And the exchange levies a penalty on the broker, which, depending on the type of the shortfall, may get passed on to you. So even the collateral sitting in your account is being counted, moved, allocated, and reported every single night. So let's step back and look at the whole night the way we looked at the whole journey of an order the last time. The market closes at 3:30, files start arriving from the exchange, segment by segment, through the evening and deep into the night. Back office processing systems process your trades, calculates every charge, works out your obligation and generates your contract note. Shares move, sellers deliver into the clearing corporation, buyers get credited straight to their demat, all matched by your UCC or your BOID. A settlement team cross-checks 3 sets of records until everything balances. Your P&L, your FIFO costs, your tax reports get calculated and synced to console. Money flows in and out in scheduled batches. Collateral gets allocated and reported to the exchange. And finally, fresh files get loaded back into the Kite terminal. So that by 9:15, everything is clean, current and ready. All of it happens starting the moment you shut your laptop after 3:30 and finishing just before you open it again the next morning. And the strange thing is, as with the journey of an order, if everything goes right, you see none of it. You just log in and your numbers are correct. Your holdings are right. Your balance is right. Your P&L is right all the way to the last decimal. And that's the whole point really. But it's hundreds of people across entities, several systems and an entire overnight machinery all working so that you never have to think about any of it. And before I close, I asked the teams the same question I always end up asking. What can go wrong here? Well, a couple of things they said. Sometimes the files from the exchange come in late, which pushes everything downstream. And very rarely, but it does happen, the clearing corporation itself can go down, as it happened recently sometime in Feb this year. But all said and done, the systems, the processes, the checks and balances behind all of this are among the most robust anywhere in the world. I hope you found this episode useful, and honestly I hope it gave you a little bit more context about how things work at a broking firm, especially post-markets. As always, if you have any questions about anything we covered today or anything else, drop them in the comments below and I read them all and I'll do my best to answer. See you in the next one.